everyone. What a delight to be here in person with all this COVID and pandemic and everything going on, isn't it? So the world is going through this unexpected change with the strategy for almost every industry. And I believe banking is one of the most predominant of it, along with the supply chain, of course. And as we are gathered over here, rather than talking more about Panamax and our offerings, I would want to give you a heads up that it's going to be more about the knowledge sharing into how far we have come across in fintech and banking. And there is a lot of long way to go. So today's agenda is, on a broader note, how can banks and financial institutions create a persuasive customer experience beyond the boundaries? I'm Priyanka Brahmbhatt, the Executive Director of Panamax. Oh, sorry, the clicker doesn't work. Yeah. Sorry. Well, I'll continue. I'm Priyanka Brahmbhatt, Executive Director of Panamax. Some of our product offerings are central banking solutions, unified transactional switch, where use cases are wallets, KYC, supply chain transactions, and so forth. Our use cases are into banks, financial services, hardwares and POSes where transactions happen. And on the primary note in today's agenda, I'm going to cover the payment industry and evolving banking tech. Here we will understand the world of payments and the new age experiential banking. Then we will answer if digital-only strategy is sufficient to drive customer engagement or customers want best of both the worlds, and how we can maintain the equilibrium. Lastly, we will come to the future of the industry and discuss the significant collaboration into growth, profit, and expand. Thank you. Oh, I think you need to do it for me.
I can do it for you.
Can you go on slide 3? I'm so sorry for the glitch. It just happens. Thank you. Oh, slide 4 now. So, to the new age experiential banking and the world of payments, let's take a look at the next slide. The digital transformation is constantly causing expansion as well as diversification of the banking industry. The payment world is becoming less hierarchical, more accessible, and easier to navigate. Previously, personalization was a service only available to elite. It's like, high income, high net worth banking customers used to have that, but now it's need of the hour for each and every one. And one thing that pandemic has really spanned around the world is that the global shift from physical banking to virtual one has become more noticeable. A McKinsey report from 2020 offers the example of Australia, which closed down most of its ATMs and branches across the country. And they said this phenomenon will soon be widespread across the rest of the world. For instance, HSBC has already closed down all their branches in the US. They're going completely neobank, and they're having virtual AGMs and virtual branches over there. So that's the future, because one thing that COVID has really taught everyone is everyone has access to the virtual world. And that's the reason we need to be more prepared than ever. Like Javier talked about phase 5, from KYC to transactions, everything is going to be on the tip of your fingertips. But the question is, how did we come to this? So let's go to pre-90s, where we started, because it's been a long journey. And when physical branches were restricting to a specific hours to carry out the transactions, taking forever for the money to reach from one destination to another. And the entire transaction paradigm was actually very much dependent on how smart and intelligent the customer is to ask the right questions, and how helpful the banker is to really answer those questions which aren't asked for. But now, major non-banking disruptors like Google, Amazon, PayPal, Facebook has changed the game totally with their devices, with their OSs and whatnot. And then came 2020. The impacts of COVID-19 crisis has actually shown 500% off-bit boost, not only in the technology of financial transactions, but also in the usage by the customers, the customer demand, and the future of how the transactions are going to happen. The customers are becoming more and more smarter to ask the bank the right questions. What is your platform's technology based on? How are you managing my privacy? How are you actually carrying out my money in 24 hours? Is it really going to happen? How is it going to happen? The impact of the pandemic has also changed the dynamics of the long-term banking in the customer relationship. So such disruption also has forced banks to collaborate and move fast forward into innovation more than ever. On the next slide, let's have a reflection on ourselves. We have always been, the humankind has always been into some sort of transaction since, from barter to whatnot. But now more than ever with e-commerce, with people migrating more than ever on a quick basis, the transfers and whatnot, the currency rate and the transaction rate has also changed. So before they were replaced by paper money and banknotes, that was very easy to carry. Now we have become, then came the bills of exchanges and then came the wallets. I came to London from New York, hardly used my credit card even once. Apple Pay is my go-to. So, the 20th century just saw this whole boom, and today here we are using alternative payments, skyrocketing with it, cryptocurrency. So decentralized currency was actually a concept from 1998. Very interesting. But finally, in 2015 or so, it saw a boom by Bitcoin, and it is here to stay, and it's nowhere to go. And that's where fintech also plays a major role in the regulations too, on how we can protect what we have in the regular currency and the cryptocurrency, and how we can actually transform the transaction rate in between them. The next slide, we're going to go to the need for the transformation in banking. So why has this need for disruptive banking suddenly a necessary? The traditional banking systems have been incredibly slow in undertaking digital reform even now. The architecture is monolithic, so it takes forever to upgrade to what the customer demands, but by the time they deploy the current technology, the demand has changed. The payments, investments, mortgage, and personal lending, the emergence of disruptive banking models has begun to substitute every single customer chain and fintech prominent player and avail state-of-art services along the enriched customers. The number of tech giants too have begun to invade the banking landscape, who had nothing to do with transactions whatsoever. Be it Google, Facebook, Microsoft, Alibaba, Apple, or Amazon, their financial propositions powered by ultra-modern technology has brought banking to the customer's doorstep. The cost of company has a number of components like cost of land, lease, customer experience cost, management cost, cost per transaction, and cost per distribution. And the incumbent has also had the challenges to battle rapidly evolving banking and transaction methods. Digital transformation will not only reduce operational expenditure for banks, but will also add revenues by reaching out to more customers 24/7, lowering their cost by the lease and the rents and the customer service representatives and whatnot, because ultimately your app and your infrastructure and the customer is interacting by itself. This way you have more revenues on your interest rates and whatnot. All successful public financial infrastructure should be able to connect individuals to payment systems, and government payment facilities should direct financial support to those most need in timely and cost-effective manner. Emergence of digital technology opens new opportunities for most of the 1.7 billion adults that make up the unbanked population. That's one of the targets, especially in the developed countries and the emerging countries where there are unbanked population. How can you actually moderate them? They own the smartphone, there are internets everywhere. So that's where banks need to play a role, because half of the time they don't go to the bank because they're intimidated by the banker. So on the next slide, we're going to discuss the future-proof disruptive tech. So what does disruptive tech really mean? It's like open APIs, for an instance, create partnerships and bridge financial institutions, businesses, consumers, and products all together in one platform. It's a whole ecosystem. You buy, you pay, you transfer, there's P2P and whatnot. So imagine if there's a platform which actually brings everyone on board together without having a longer deployment rate. That's going to be a game changer. AI and ML have the ability to solve the wide spectrum of complex business problems through algorithms that enable banks to accurately shift through, assess, and lift the liability of the bankers and the customer to some extent. The linking catalyst to Internet of Things links most everything under the sun, including devices, cars, buildings, appliances, and people by building a network wireless connections via internet. You can actually today, there are some technologies, you can ask Alexa to just send $10 to your friend. So think about it, how convenient is that? Robotic processes, automation can save labor, operational costs, and minimize errors. By recording every transaction in block and adding each block to the chain, financial institutions can have shared digital ledger that stores provide real-time customer data, behavior data, and also the security data of false and true. Instant payments. Remember the days we had to wait 10 days for that wire to go through? And now you use some of the technologies in 2 minutes, it's across the ocean. Voice interfaces or chatbot solutions. With AI, like I said, you save so much on the customer services. Sensitive personal and financial information online is attractive target to cyber criminals. So security is paramount of financial institutions. Preventing all cyber attack is really impossible due to diverse ways consumers interact with their money and vulnerabilities that exist. However, with AI, ML, KYC, and this full stack of product integration, the open APIs, we have the ability to do that. And nonetheless, natural language processing system, because efficiency in the compliance and back office applications is so important. Today, there is one regulation, tomorrow is another. Your platform needs to have the ability to adapt to the ever-changing regulations and its behavior. Now, on the next slide, I'm going to talk about resilient digital foundation, why it's so important. So, Capgemini's 2021 World Retail Banking Report found that more than 4 of 10 customers face medium to high friction while engaging with their bank for regular services. What is stopping banks from delivering empathetic services? The report found that only about 30% of the banks take periodical steps to know actually what customers want. But if you have AI, ML, and natural language processing in place, if your platform is capable enough to really understand from the behaviors of the customer of what they're asking for, you can have a constant R&D and deployments going on, which makes you stay ahead of the curve. Long-term sustainable growth powered by efficient platforms and customer-centric makeup, the foundation of next-generation banking. Success enablers including data, embedded finance, and intuitive digital CX player. The roadmap to this new banking era includes the adoption of banking as a service solution. On the next slide, we're going to break this apart to personalization and digitization, maintaining the equilibrium, because customers sometimes just want best of both the worlds. So on the next slide, let's talk about Omni-Channel Experience. Can the banks adapt, lead, and thrive in the banking in 4.x era? The answer is yes, and the catalyst is omni-channel banking. Omni-channel banking is banking approach that integrates different access channels to each other to create a seamless transactions, interact with the customer, how banks personalize their offerings depending on the device usage of the customer. And I must add here, a study by Experiential in 2019 highlighted that about 50% of the users wanted to be able to switch between human and digital channels on constant basis. There will be a month that they just want to have a human interaction. And It ranges from digital to personal interaction in about 80 to 20%. 20% they need human interaction, 80% digital. An efficient omni-channel banking strategy also helps banks to collect relevant customer data and subsequently create personalized campaigns based on the device usage of the particular customer. You can see the chart here shows all the different kinds of channels which are supported by a robust architecture based on the open APIs, from the online portals, automated decision-making, scheduling, call center, third-party services, wearables and home automation, and whatnot. And on the next slide, I'm going to take up digital interactions. What can you offer? As I mentioned, both digital and personal interaction together craft the experience of the customer. The banks can easily offer various operational services to the customers, like simplified onboarding process, anytime, anywhere banking, higher interest rates on savings because you're already saving money on the customer success phase, robust reward programs, convenient usage, sophisticated firewalls, fraud management system, scheduled services, which actually reminds a customer, hey, it's time to step in the bank. Do you want to meet a human? Real-time payments. On the next slide, I'm going to talk about bringing personalization. Consumers, however, want to move fluidly from one channel to the next. What they really want to do is start a transaction online and then have an option to complete it in the branch. They might want to research something online and have a bank person explain more about it on the chat, on the phone. And yes, the digital first approach today, a bank may choose to give both the best of both the worlds. And with the AI ML, you can actually make your platform might have the capability to actually check, oh, the customer is stuck over here since past 20 seconds or 30 seconds. You have a pop-up message, you ask them, do you want a human to interact with you? It seems that you are stuck. It's all those algorithms that comes in the picture. The data generated through digital mediums of operations have led banks and FIs to integrate the multiple channel and extendable insights. Management of high-end services like wealth management, convenient banking, where customers need any kind of direction of real-time assistance, 24/7. Best of both the worlds. Anything to do offer, digital can definitely be facilitated manually as well. Brownie points to the personalized banking there. There, you can have cash deposits in the drive-through ATMs, flexible transactions, and so forth. On the next slide, I'm going to discuss the balancing act. Banks must find the combination of digital and personal interactions in a very careful manner. Most have made progress ramping up investment in the infrastructure and report platforms to complete the traditional challenges. However, many have not yet made the leap from multiple channels to omni-channel. That is, making movement between channels seamlessly and using digitization to enable cross-channel sales and marketing. There are some capabilities banks will need to develop if they wish to go for a true omni-channel distribution and really carry their customers a long way and onboard more of them rather than them going to a decentralized apps or financial wallets. Advanced analytics applied to the data generated by customer transactions in digital banking can be used to increase the effectiveness of omnichannel sales. Digital marketing is giving significant boost to every industry, and banks too need to take an advantage of inbuilt campaign management system in various web portals and mobile apps. Just like the right digital powers can win over customers, a customer call at the right time or can address the customer needs. Finally, any user touch point should be personalized. Any analytical data and personalized insights passed to the relationship management, enabling them to use the information for better customer services. On the next slide, I'm going to talk about the transformation through collaboration. There's powerful transformation in the banking industry. Sorry, slide next. Oh, thanks. Banking industry for long has had a reputation of traditional industry which has stuck due to the security concerns. If you see, we have been so focused on the relationship that we already have, we have forgotten how to build the new ones and onboard the new ones constantly. Banking customers are no different when it comes to managing their money. They expect to access the information and perform an ever-expanding list of banking actions anywhere, anytime, anyhow. They expect the banks to meet their individual needs and preferences in the same way that their media streaming services does. Like maybe you can suggest a credit card, or maybe you can suggest how their accounts need to be set up based on their spending behavior. And today's mobile-first society enables personalization on a scale that we have never seen before. At least in 10 years before, it was so different. And in the last 3 years, it has been bombarded with the mobile app versions. There are valuable lessons to learn from the industries like retail that place a strong emphasis on customer experience. And banks are actually more than retails. They carry a lot of money. They need to build the same level of experience and trust with the customer that it will be delivered when and how. On the next slide, we're talking about curating persuasive customer experience. To reinvent the key customer journeys, banks must understand and assess the experience of current customers and then develop the baseline for most of their needs. Increasing revenues and reducing the personal cost is one of the ways. The slide points out some of the methodologies on how we can go about creating the customer experience beyond the banking boundaries. There's a whole chain, right? You enhance it, more customers get onboarded, the more transactions they carry out, you increase your revenues, and you actually decrease their personal cost because they save time and they save money on the transactions. And the banks can decrease their personal costs as well. It's just investing in the right infrastructure is the key. It's like one-time expense for a long-term return. On the next slide, I'm going to talk about collaborate to transform. For banks, identifying business processes and overarching transformation, it's a very loss-making game. As a bank, you must identify business processes that can be most improved through digital collaboration. This involves mapping out all the core banking processes and prioritizing those with the uplift of digital collaboration. In most cases, a small set of processes is responsible for generating the bulk cost. For example, one UK bank found out of its 50 end-to-end processes, about 50 accounted for roughly 80% of the entire cost base. It's a Pareto rule, it's 80-20. More broadly, banks should also examine the operating metrics of all significant business processes, comparing performance to their own KPI targets. For the top use cases for digital collaboration, banks should determine what technology is required to address pain points in the most insufficient processes and enable further collaboration. The third, bank must also promote digital collaboration to a high strategic status, publicize savings of cost and time, and demonstrate its importance in the organization's broader digital efforts. Besides technical know-how, banks are generally seeking fintechs that are better positioned to meet the requirements of major financial institutions and understands what their practical, achievable, and scalable is in their own sector. A better coordinated governance and organizational structure, even within the government and regulatory board, is so important to carry this out. Financial institutions should also appraise fintech investment holistically. For example, merchants may not look to get cheaper payments through a fintech solution, but also look at how to get more comprehensive data on their customers for service and marketing needs. On the next slide, I'm going to discuss reimagining the banking ecosystem. Now let us put all these pieces together of what I just discussed and rambled on all the knowledge sharing and whatnot. A platform that can offer top security to your customers, that can let you battle through the evolving customer requirements and expand your offerings at any point without affecting the OpEx. Security, resilience, scalability, and customer experience are the pillars of a strong banking ecosystem. By the way, that's when you come to Panamax. As a financial institution, here's what you should expect from your platform service providers. Offering unified customer experience across different platforms, multifunctional dashboards for customer convenience that they can manage within the team, unifications of customer touch points so they are able to seamlessly traverse through various access channels without losing the history, deploying marketing campaigns for increasing success rate, improved user insight crafted through digital analytics reports available over user-friendly dashboards, easier rollout of new products and across different access channels, which is very seamless and easier for customers to adopt. Multiple deployments options, including on-premises, cloud, or hybrid. One such real platform is MobileFin Elite. Our platform is no-code, low-code platform, which has microservices architecture and boasts of the first in industry security features. We are the first platform to really provide ECC-based security with PSD2 and GDPR compliances once MobileFin in the market readiness across the continents. The GUI-based integration and API management module of MobileFin Elite offers flexibility and ease for API integration for the financial solutions tomorrow. When we say we are no-code, low-code, we are so highly configurable. We have spent years migrating from various industries and thorough research and development, which is an ongoing basis and day-to-day that happens in our headquarters back in San Diego, in India and New York and so forth. We can proudly state that everything that I talked about, from eKYC to managing your customers to setting up the entire ecosystem and deploying the technology within the time, we are like one of the kind to actually take the security very seriously. So the security concept that you have in Bitcoin or cryptocurrencies, the same that we provide over here. So thank you for listening to me. And I hope that this presentation kind of revised what you already knew, gave you the perspective of what has to be done, and filled in some of the gap analysis over there. And I'm open for Q&A.